Hello guys, welcome to my YouTube channel. I'm starting a new series specifically focused on option selling. In this series we will follow a structured approach to understand the price movement, and we will try to generate profits, and I will show you what are the trades I have taken in real time, and then we will discuss about it, and we will follow some of the rules. And these are the rules that I follow, that we will focus only on one time frame, that is a 5-minute time frame. Okay, as you can see that these are the 5 minutes time frame, and we will follow it. Okay, and I have numbered every candle so that it will be easy for me to discuss about and give you some guidance and what are my views. Okay, we are only concerned with the price action only. We do not follow any indicators or external rules. I generally use only one, that is 20 EMA, exponential moving average. It does not provide any signals, but I just want to know whether the prices are above the EMA or below the EMA, nothing else. Okay, we will study candlesticks, and we will observe and try to analyze the candlestick which occur every 5 minutes, and try to analyze it and try what are the behaviors in relation to previous candlesticks. Okay, now this is the most important thing, that risk to reward ratio. My risk to reward ratio is 1:3 or 1:4 or about that. I will only risk 10 to 15 rupees and not more than that. If my trade goes against it, then I will be stopped out. Otherwise my reward is 35 rupees. This is the minimum, or it has to keep on going, means there is no limit to it, but I won't get out below 35 or below 40 unless and until it is been if I stopped out at break even, then it is not an issue. We will discuss it in detail. Okay, what is the main purpose of doing the analysis bar by bar is trying to understand the buying and selling pressure. We will try to learn, or we will try to judge what are the bulls doing at that moment and what are the bears doing at that moment, and we will try to identify some of the patterns which are profitable. Okay, so this is thing. Okay, now trade selection and discipline. This is my 6th rule. My the most important rule is to avoid bad trade. For me, bad trades are taking unnecessary trades and which have low probability, and completely avoid counter trends. We are never ever going to trade counter trends. Okay, and avoid predicting breakouts. It means that once the price is going in a trading range and somehow it is going to break out in either direction, but we will never assume a breakout, and we will always wait for the confirmation after the breakout has been formed, and we will try to focus on the second leg after the first breakout. So we have to pay close attention on the price behavior, previous highs and previous low. Okay, what are the entry and exit points? So we will only enter after a signal bar has been generated, and if we want to go, means on an upside, means selling PE, we will go we will take our trade once the high of the signal bar has been hit, and for selling CE, if the price hit the low of the signal bar, then we will enter it. Okay, now this is charts. Okay, so today we are going to do the analysis of 2nd April 2026. Now this is I have just opened this because I just want to let you know that there was a gap down. Now let's go and try to understand each and every candles. Okay, now let's go here. Now as you can see that the price has broke down, and the very first candle is a long bear bar. Okay, now I was thinking that many times after such a big gap down, most of the time the price reverses within 15 to or 30 minutes. So I was thinking of a second leg down, and never. So this is the point where I would like to take into consideration that if you want to short CE, means we are expecting price to move down, never ever enter above the bar. It means after this bull bar we should never enter over here to for a short sell. So I was waiting for this, and see the first bar, there was no break of first price didn't go below bar 1, and bar 2 was formed, bar 3 was formed, and the price didn't go below bar 2, bar 4 the price didn't go below bar 3, but bars high it is keep on making higher highs than higher highs. Okay, this was the bar on which you can see the bar 5. Many bears have tried to trap the bulls, and they wanted to make the price lower, and this was my signal bar. But on the 6th bar the price didn't went below this, so I have took the trade of shorting CE on, let's see at what point I have taken the trade. As you can see that I have short one of my CE at 939. Okay, so let's check when it was 939. So this is 939, then it is showing 940, means as you can see that this doesn't show, this is 40. So in this bar, so on this bar I have taken the trade to go short, and my stop loss was 10 to 15 rupees. Okay, now at 10:41 my stop loss what was hit. Okay, as I have told that this was why, this is one of the mistake I have taken. Now I remember it. The price didn't went below bar 5, and I took a trade over bar 6 assuming that the price will go down, but it didn't happen and went up, and it hit my stop loss. Okay, then at 9:48 again I have taken the trade at 264 value. I'll show you at what time. 9:48. So on this bar, so below this 6 bar I have taken the trade assuming that the price will move down, and I got at 264 rupees. Okay, now at 10:57 I got out at 249 rupees. Let's see where is 10:57. Okay, around this point, at this point I have got out of my trade. I think so. this is the bar 20. Okay, so my purpose was that after I have taken the trade, I let the price get moved, but it didn't went down as I was expecting it. So I took the trade and I got out of the trade. So let's see that this is most of the cases in which I was thinking that the price might go down, but as you can see that all these are overlapping bars and price is getting accumulated, and from bar 22 to 27 there is a what you say, a downtrend. After that, it is better I can show it on this. This is a better view. Okay, now at this point, at this bar, it broke the high of this bar. Okay, so I am talking about this. So this bar has broken the previous high of this and then it pulled back. So I took a trade. Now again I have made a mistake. I will let you know. Okay, from this contract note I will let you know. I short PE at 1218 and I was stopped out at 1221 just for 10 rupees. This was my mistake. This was my biggest mistake. This is the place. This is the place. This is the place where the price didn't move above this signal bar. As you can see, now let's discuss this. This is the breakout point. This is the pullback. This is an H1 pie setup, but I didn't took the pie setup because this was a red bar. So I waited for a second bar, and this is the bar. I should have waited for the price to go above this bar, means bar number 37. This is bar number 37, but price didn't went about it, and before that I took the trade and I got stopped out. So due to which, because I stopped out, because I was thinking that because it was my stop loss, so I didn't pay attention much, and it is my rule that I shouldn't do anything about it. Okay, then after that I took another at 1226. So you can see that at 1226 on this bar I took the trade once the price went above this bar. Okay, and I shorted a P at 262.9 rupees. Okay, now the funny part is going to come. Okay, after that, as you can see that after that the price went up and it also had a breakout. So you can enter at this level also, but this is a very choppy level, and on this 47 bar 1 o'clock 7 minutes. This is 1 o'clock. This is 1 o'clock 7 minute, and I got confused and somehow I got out of the trade, and then I didn't trade for the rest of the day because I was worried about it and that my price might get down, but I missed the whole leg, and as you can see, I just made 14 rupees. So this is the funny part of trading. I kept on. So once I have got out on here, I have placed my stop loss at around this level, and but I was worried about when the bar 47 was forming. I got worried, tensed, and what to do don't know, and I got out of this trade. So this happens. So this was my trading experience on the 2nd of April, and you can see these are all, this is a breakout. You can enter at this pullback. This is breaking out. You can even enter the pullback at this point, but it is very difficult to enter it at this place because we are always thinking that the price might go down. Okay, so this is all for 2nd April 2026. In my next video I will try to give my other trade, so and my views on how I have traded. So thank you very much. See you in the next video.